Hello there. Welcome to Financial Accounting N5. Still working on a paper of June 2023. This is the recent paper that we have for Financial Accounting N5. This question is on the calculation of insurance claim. So we've got a question that we are given here that we want to go through before we answer the required part. Right. The question reads: when Miss Smith unlocked a shop on 17 March 2020, she found that all the inventory except inventory to the value of 7,850 had been stolen during the night. So we've got inventory that we have here that was left after the other part of the inventory went missing. So we have this one there. So this one represents the salvage amount. This is the salvage. We are going to proceed with the question. The question reads again: from a financial record, the following was found. Ms. Smith maintains a markup of 60% on cost price. So this is a markup that is there on the cost price of normal goods. This is the markup on normal sales. So basically, we can say 60% is representing gross profit on normal sales. And then sales on 17 March 2020 amounted to 860. So this is our total sales that we have. And remember, this total sales, we have got normal sales inside this amount, and also we have got staff sales inside this amount. If you go to the next sentence, she sold inventory to her staff at cost plus 10% to the value of 36,350. So what it means that this figure represents the staff sales. So this one is the staff sales. This one represents staff sales, and this 10% now is the markup on staff sales. So it's representing gross profit on staff sales. So that's what we have there. So this is the representation. So what it means is inside the total sales that we have. In other words, we are saying total sales. In other words, we are saying total sales is equals to normal sales plus staff sales. So that's what we have there. So and also the gross profit that we are going to get will be also consisting of gross profit on normal sales and gross profit on gross profit on normal sales plus gross profit on staff sales. So that's what we are going to have. So the last paragraph is reading: inventory 31 December 2019, which is the end of a financial period, was 63,700. So we see that the date that you are given here, they are saying this is the end of financial year. The end of financial year is 31 December, correct? But we are in 2020. Remember the question here saying when Miss Smith unlocked the shop on 17 March 2020. On 17 March 2020. So this amount that we are given here is going to be our opening stock or our opening inventory. Here, this is going to be our opening inventory. So we are going to prepare a trading account, and we are going to start with 63,700 as our opening inventory. The next thing is the purchases of the period up to 17 March 2020 was 620. We are 620,300, of which inventory of 10,300 was returned to suppliers as damaged inventory. So this is going to be our purchases figure, and for the purchase figure again, we have got returns that we have of 10,300. So these ones are purchases returns. So in the trading account, as we know, we also subtract purchase returns from purchases as we are trying to calculate gross profit. So so what it means in the question that we are given, the figure of gross profit, you can find it because we have already given the percentages in terms of markup. So we can use the markup to find the gross profit for the period. And then this gross profit is going to lead us to the closing inventory. And we would see that uh, the 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 gross profit will be consisting of the staff gross profit, and then we also have the normal sales gross profit. So we are going to employ that as we calculate that figure. Right. Let's go down to see what the required part, what the question requires us to do. The question is saying Ms. Smith requested you to calculate a claim to be submitted to the insurance company. The inventory was fully insured. So the claim, the calculation of the claim, the formula to calculate the claim now, we are saying, but basically this claim is going to be represented by the stock loss. The stock that is missing is going to determine the claim. So in other words, we have to calculate the stock loss, and that stock loss will be the claim. So stock loss is equal to closing inventory, minus salvage. So this is the formula that we have. And this, the closing inventory, if you come here in the information that we are given in the question, you would see that we are not given closing inventory, we are only given opening inventory. So it means we need to prepare the trading account so that we find the figure for closing inventory. And the figure for salvage, we are given it as salvage represents the stock that remains after the other part of stock went missing. So that represents salvage. So if you come to the question, you would see that the figure for salvage is this one, which is 7,850. So the figure that we need to find is the closing stock. And the closing stock, we can find it by preparing the trading account. But what we know in terms of the trading account is used to calculate gross profit. So in the trading account, the formula that we're going to employ the trading account is we want to find in the trading account, we'll be finding gross profit. So the formula that is used is gross profit is equals to opening inventory. We add purchases and we subtract returns if they are there. Purchase returns. We add carriage if there's carriage in the question, and any customs duties if they are there in the question, and also subtract closing inventory. So that's what we have here. So you'd see that we are going to prepare a trading account. So we are going to have a T account that we are going to prepare so that we can find the figure for closing inventory. But basically in that T account, which is the trading account, you'd see that our opening inventory will be on the debit side, and then also our purchases comes on the debit side, and our returns, our purchase returns can come on the credit side as purchase returns, or we can subtract them here to get a net figure for purchases. And then we have our sales again on the credit side. We have our sales on the credit. Right, our sales will be on the credit there. And then other items that we can include there, and obviously our closing inventory will also come here on the credit side. And then our gross profit will come on the debit side. If there's a gross loss, the gross loss will come here, will come on the credit side. But basically, if we are preparing account, it's either we're having a gross profit or gross loss. But if we have a gross profit, it will be on the debit. If you have a gross loss, it will be on the credit. So that's what we have. Then on sales again, if there are sales returns, you can put them there on the debit. But yeah, we can also subtract them and put a net figure here, and then we don't put sales returns on the debit side. So that's the issue that we have. So the figure that we want to find here is this one. So we are going to just put those figures at debit, credit, and then we find closing inventory as a balancing figure in that trading account. As we see, some of the figures are there. So obviously, we go now to our question. Let's go to our question. We can go to our question now. Right. Let's try to see what we have there. So if we go to our question now, you will see that the figure that we are going to start with in the trading account is the opening inventory. So our opening inventory is here, which is 63,700. So we can go to our trading account. Here we have got our trading account. So on our trading account, we are going to have our opening inventory on the debit. Then our opening inventory is 63,700. Then we can look for other figures there, like what breakdown that we're given there in terms of purchases. Let's look for purchases. Purchases we are given there. They are 620,300, but there are also returns. We can just subtract and put a net figure there on the debit side. So we are saying 620,300 minus 10,300. So purchases. So we go back. So we are saying now purchases, and then we can just make a calculation there by saying 620, 300 minus 10,300. So on purchases, we are saying you can do this, find a net figure, or you can put the whole figure 620,300 here, and the purchase returns to put them on the credit side. But here we can just do this, and then if you calculate that one, you get 610,000. Right, so that's what we have there. Then I will look for other figures that we can put there in the trading. Remember, we have also the sales figure. The sales figure we are given it here, 860,000. 860,000. But then in the sales figure, like we had explained, that we have also staff sales inside the this total sales figure, and also we have normal sales. But we are just going to put 860 there as our total sales on the credit side. So here we have sales and 860,000. Then the figure that we are looking for is closing inventory, and the closing inventory is not given. It's supposed to be on the credit side here. Closing inventory. So we can leave it blank there. That's the figure that we want. And also gross profit should supposed to become here on the debit, remember. But the figure for gross profit, you can find it now. The figure for gross profit, we can find it. So we now know that the gross profit on normal sales is 60% here. And also the gross profit on staff sales is here, which is 10%. So what we are going to do is we are going to calculate the gross profit amount on normal sales, and then we calculate again the gross profit amount of staff sales separately. Then we add the two gross profits together. Then we put the total amount in the trading account. So let's start with normal sales. Like normal sales, we are saying this is our total sales, but we are given the figure for staff sales. So we can find the figure for normal sales. Like we are saying that, let's try to see there. We were saying total sales is equals to normal sales plus staff sales. That's what we have. And then our total sales we are given is 860,000. And then our normal sales is the figure that we are looking for. Then our staff sales we are given here is 36,350. So that's what we have there. So we can find the figure for normal sales. Now normal sales, you can just make normal sales start with the formula. It becomes normal sales is equals to 860,000 minus 36,350. Then we get the figure for normal sales is 823,650. So that's what we have in terms of the figure for normal sales. So we now have the figure for normal sales is this one. And then the staff sales, obviously, we have it there is 36,350. So out of these two figures, we are going to find gross profit for this one. and then find the gross profit for this one. Then we add the gross profits together. So we can start calculating the gross profit for normal sales. Right, we can start calculating the gross profit for normal sales. Right, let's try to see there. Right. Right, so we are having a problem a little bit there. Right. So what we are supposed to do there, we are supposed to calculate now the figure for gross profit for normal sales and staff sales. So we can just use proportion there. Remember, for normal sales, the markup that we have 60% here for normal sales. So what we are going to do, we are going to say, remember, we have our cost price, then we add gross profit. That's why we get our selling price. So our cost price always is represented by 100%. Then in this instance, for normal sales, our gross profit is being represented by 60%. And then obviously our selling price becomes 100 plus 60, which is 160%. So this is the representation that we have. So you can use proportion there. So we are saying the figure that we are given is for sales, it's 160%. So we are saying for normal sales, 160% is equals to 823,650. So the figure that we want is for gross profit, which is 60%. So obviously this we are going to have a less figure there. So we can just make a proportion by saying what we don't have is 60, we put it as a numerator. What we have is 160, we put it as a denominator. Then we multiply by the given figure, which is 823,650. So that's what we have there. So if you make that calculation, let's try to calculate that one for that gross profit. You find that the figure that you are going to get there is 308, 308,868, 860, sorry, 868 here. We have 868 there. And then we've got a comma there, 868. So we can just maybe rewrite this one. We have 308, 868, 0.75. So this is our gross profit on normal sales. So gross profit on normal sales. So you're given this one is our gross profit on normal sales. Then we can also find the gross profit on staff sales now. Gross profit on staff sales. So now we want to find gross profit on staff sales. So this is now gross profit on staff sales. So the gross profit on staff sales, we are saying we also use proportion. We are saying 160 is equal to, remember staff sales, we said the figure for staff sales. Let's just check that figure there. Staff sales is here, 36,350. We have 36,350. And then the figure that we are looking for is 60%, which is obviously going to be less. So we are saying the less figure as a numerator, since we have less, and then the bigger figure, the greater figure comes out the denominator, then you multiply by the given figure. Yes, by the given figure, which is 36,300. I think we have made a mistake here because the profit that we have, here, we can just remove that one. Let's go back there to check what the question is saying. Right, if you come here, you would see that the staff sales, she sold inventory at staff at cost price plus 10%. So this is the markup on staff sales, 10%. So we are going to use 10%, not 60% there. So for staff sales, it's 10%. So here we are saying the figure that we have here is this one is representing 100. It's representing 110. Remember, we have 10% for a markup for staff sales. So we are saying 100 plus 10 to get 110. So this 110 is 36,350. Then the figure that we are looking for gross profit or staff sales is now 10%, which is a less figure again. So basically here now we are saying this 10 is less, so it's going to be a numerator. Then the bigger side becomes a denominator 110. Then you multiply by 36,350 over 1. Then when you calculate that one, you're supposed to get 3,000. You're supposed to get 3,000 there. Get 3,304. 304.55. Right, so that's what we have there. Then now, having now these two figures, we now have gross profit on staff on normal sales, this one, and then gross profit on staff sales. So that's what we have there. So this one is gross profit. This one now represents gross profit on staff sales. So that's what we have. So our total gross profit now. So you would see now total gross profit. Total gross profit is equal to gross profit on normal sales plus gross profit on staff sales. So that's how we find our total gross profit. So we can just take the figures that we have there, and we'd see that the gross profit that we got for normal sales, gross profit on normal sales is this one, 308,868.75. Then we add the gross profit on staff sales, which is 3,304.55. So we come here, we just summarize that way. King, we are now saying 308,868.75, and then we add the figure that we have for staff sales, which is 3,000, which is 3,000 here, 3,304.55. So if you add the two, you are going to get, you add the two, you are going to get 312,173.30. So this is our total gross profit. So this is the figure that we are going to take to the inventory, to the trading account as gross profit. So we take that figure, we go to the trading account, we put that figure here as our gross profit. So it's going to 312,173.30. With that now, we can now put our double lines to find the balancing figure for closing inventory. So if you add the credits, you're adding 63,700, 610,000, 812,173.30. You are going to get 985. yes, you are going to get 985,873.30. So the same figure is going to come here, 873.30. So you say this figure minus this figure, then you get your closing inventory, which is 125,873.30. So this is our closing inventory, 125,873.30. Then now we now go down to calculate the inventory which was lost. We now go down to calculate the inventory which was lost. So you find that the inventory which was lost, we've got a formula that we have there. Remember, we put down the formula for stock loss, which is the stock loss. We said it's equal to closing inventory minus salvage is the amount of stock that remained after the loss. Then our closing inventory, we now have it there. We found it there, 125,873.30. And the salvage, we can find it in the question there. Right, if you come here, you'll see that the salvage is this figure that we have here, which is here, which is 7,850. So that's the amount that you're going to subtract from closing inventory to get the stop loss. So here we subtract 7,850. So when you calculate that one, you're supposed to get 118,023.30. So this is representing our stop loss, and this represents the insurance claim. So this is also the insurance claim. So basically that's what we have here. So we are meaning the same thing here. So this is our insurance claim of stop loss, 118,023.30. So that's what we have, guys, in terms of the calculation of insurance claim on a paper from June 2023. Stay tuned for more videos as we prepare for exams. Those who haven't subscribed, please subscribe and share. We'll meet again in the next video. With that, I'm signing out.